Hi everyone, it's Stu here again. Hope you are well. It's Tuesday, the 1st of April, so we've got a new month. We've got a new quarter, obviously. We've had PMI data this morning. Unfortunately, my calendar's not updating very well, so I've got the Forex Factory one on here in a minute. Let me just see if it's going to play ball again. It hasn't updated the US data, but hopefully you can see that. Let me just make myself a wee bit smaller. There we are. Hopefully everything's up and running. See the audio's working all right. Yeah, looks okay. Video's fine. Good. Okay. So a bit disappointing. Right, let's go back to the beginning of this morning, the beginning of the day. The main news overnight was the no change from the RBA, the Reserve Bank of Australia. Interest rates remained at 4.1%. The outlook was what's the word? A bit gloomy, more focusing on the uncertainty of the obviously the tariffs, incoming tariffs as they are tomorrow. Remember, Trump is talking about Liberation Day tomorrow. Was that the way? Yeah, it was Liberation Day, wasn't he? He's talking about where he's getting data from 3 different departments, the Commerce Department, Trade Department, and he's going to make a decision early tomorrow morning, apparently, when he's assimilated all the information. So we'll see how it all comes out tomorrow, see what he's got to say. Before that, positive note from China. The case in the private manufacturing PMI came in positive at 51.2, better than expected. Again, quite a significant uptick, that 51.2 from 50.8. Expected to slip for March. It's actually coming better than expected. So one to watch the key Chinese manufacturing sector. And again, is that front running this impact on tariffs? Remember, China have already had tariffs doubled on their exports into the United States. The main story this morning in the European session has been the continued weakness in manufacturing sector in Europe. You can see the red across the board here: Spain, Switzerland, Italy, France, all missing expectations, all still in contraction mode, all under 50. Here, Germany, obviously the big engine room of, or previously the engine room of European manufacturing, very much in focus and in the crosshairs of the Trump tariffs, the EU at large. So across the English Channel in the UK, it wasn't any better, although it was better than expected. It was actually quite a poor turnout for PMI there as well. 44.9% new Labour government. Disappointed in that figure, slipping quite significantly from 46.9 in February. Inflation in the EU area remained came in sort of on target at 2.2%. The core number came in at 2.4%, slightly weaker than expected, but down from last month at 2.6. So again, the disinflation story starting to perhaps gain hold in Europe, but they're still talking about pushing ahead with the more cuts in Europe than perhaps in America in the Fed. But again, we'll see how this lower growth, higher inflation expectation all has an impact on the expectations in the market. And that's what markets are always looking at. They're always looking at expectations, always looking forward, 12 months, 18 months in advance about what these policies are, how these policies are going to play out, and the uncertainty around what the tariffs are going to actually look like. That's because there's no clarity yet for anybody. Hopefully people will get that tomorrow, businesses will get that tomorrow, but then as with last time in 2018, 2019, they can swing and slide and change as they start to move out. So again, we'll see obviously bigger numbers this time, much bigger numbers than we were talking about in Trump version 1. Unemployment in the UK, in EU also was ticked lower. Was that some positive news there? 6.1%, still relatively high compared to other parts of the industrialized world. So the data that hasn't actually come in, which came in 5 minutes ago, which hasn't updated on this calendar, unfortunately, it's come in positively. So the US, let me just go back to the Forex Factory calendar. You can see it's updated for 50.2, so better than expected out of the US. Again, beating most of its competition. Again, The new incoming president will try and obviously take credit for that. First time it's into an expansion zone for a while. But the more important to the Institute of Service Management, the ISM number, that's up in 5 minutes time, and that's what we're going to have a look at and see how the markets have reacted to that in 5 minutes. We've also got the jobs numbers, which were, if we just look at these two key graphs again, you see PMIs stuck very much in the negative, edged above the 50. Remember, this is contraction. Anything above this 50 line is expansion. PMIs are important because they're forward-looking. Manufacturing is important, more from a not from, obviously from a its contribution to GDP is probably about 10-12%, something like that, compared to the services sector. But it's that feel good factor, and it's certainly the core of Trump's support is very much around making things, doing stuff in the United States, whether it's cars or computers or whatever it happens to be. Making it in the US is key to his appeal. And so we've ticked into the positive the last couple of months. Are we going to hold it? Looks like we may do, given that the final reading here came in positive outside of it, but it's a wider measure. The Institute of Service Management will see that in 4 minutes time. So can we hold in the positive, out beating the other data we've seen today from Asia and European data? The other key data that's coming in 5 minutes time is the JOLTS numbers. We were under that key 8 million last month. Remember, we talked about this jobs openings in the US market, and churn, people moving from job to job. That's starting to slow down. So there's the talk of slowing jobs market. There is signs of that. It's been remarkably resilient, but the trend has been moving lower. But we sort of flattened out. We've hit sort of a bit of a level around about the 8 million line, and then we slipped. Then we had an outlier month here at the beginning of January because of the weather, I think, more than anything. So jobs openings are sort of settling down under that 8 million number, around about 7.75 million, and you can see here we're getting back to where we were pre-pandemic levels as well. So that's sort of still a relatively healthy jobs market. It's far from cracking and falling apart, as many as would say. Obviously, tomorrow we got the private payrolls number, and then on Friday we got the key non-farm payroll after the announcement from the president, or tomorrow as well on Wednesday. So key week, starting the new month, and obviously starting the new quarter as well. So let's have a quick look at the charts before we have a look at the data. Gold, we've only got 3 open trades at the moment. There was lots of triggers last night on my little old system, but I didn't take any on. There was too many. It was confusing. There was a lot of it was around about the Australian dollar. Euro was across the board. So I just left it as we wrapped up the month and the quarter. So we finished really well for March. And we've had a really good first quarter as well, points-wise and percentage-wise on our little trading account. Anyway, the open positions at the moment, we're long gold from the 27th down here at 30.54. I think we got in. Our stop loss now sits at 31.10. And we hit a new all-time high again this morning at 31.48. So 31.48, new all-time high for gold. Demand across the board for gold. It's been driving not only the uncertainty around the tariffs and what Trump may or may not push through. The geopolitical situation remains very unsettling. And just this morning we had saber rattling between China starting its inaugurated air, sea, and air war games, if you like. I didn't call them war games, but I'm calling them war games around and close to Taiwan. Taiwan set off their own jets to sort of just ward them off a bit, but that's obviously an ongoing area, and perhaps many are saying the emboldenment of China, as if they needed it, with Trump in the White House, is perhaps even more likely. But anyway, we'll see how that goes. But that's just driving market uncertainty and sentiment generally. It was helping the lift in gold. As I said, there's been a major sort of banking Basel legal changes which started the big move, or started the demand for gold, but obviously the political uncertainties added to that demand as we go forward. It may roll over. It will come to an end at some point, obviously, but at the moment the trend remains to the up, and we remain long gold at the moment. There are stop loss at 31.10 from an entry at 30.50. So when I see in the money on that one, some of our indices were stopped out, reversed and stopped us out yesterday. The S&P came back to its stop loss. Sorry, we ran to the stop. We were down here and ran back to our stop losses here. That took us out yesterday, but again, a nice big win on that. So we got that move down basically, and then back to there. So that was our first target. Did I go? Obviously return. Perhaps I should have pulled the stop loss down a bit closer on that one, but that was another winning trade. And the Dow did exactly the same sort of thing, reversed back to our stop loss yesterday, but it's come back down again this morning. So it's sort of a typical end of the quarter, end of month rebalancing, shifting of portfolios. We had a hefty sort of rally yesterday, and we've given up sort of about half of that rally yesterday so far today, and we're down at 41,740. Sorry, the data's just come out as well, so I missed that one. Let's just have a look at that data. So JOLTS has slipped again, and ISM has slipped quite significantly. So it's counter to the data we got here 15 minutes ago, which was positive. That's a slip. It's back into negative territory, as it was expected to slip to that, but it's worse than expected. So they're both more negative than expected. Prices, however, have ticked up, so it's adding to the inflation story. You see a 62.4 here. Sorry, 62.4 last month. They were expected to tick up by 2 whole points, 64.6, but it's coming at 69.4. That's quite a reported lift in manufacturing prices out of the US there, and their construction spending has gone up quite significantly as well. That's quite a hefty set of data. That so job openings have slipped again. If we look at this number, that's quite the lowest for a while. It's come in lowest for a couple of months at 77.57 million. And then ISM has gone back into, manufacturing PMIs have gone back into the negative territory. Obviously hasn't updated that one yet. I might, if I refresh that, perhaps it will. Who knows? Let's have a look. At 49. There we are. There we are. Negative 49 for the month. Oh, hang on, that's not. There we are. Negative. There's the new one. So we turned negative again. So 2 positive months. A bit like back in this time last year, April. And then it's slipped for the rest of the year. Here, last time we were significantly positive. It was the end of the COVID run here at the end of October. So a negative slip for manufacturing. ISM 49. That will probably have had quite a significant move. So let's have a look at the majors. Euro 107.97. So it's back under. Or back to 108. If we just look at this 4-hour chart, so let's bring in the 5-minute reaction. So there's euro ticking up, the weaker dollar on that combination of data. So we'd like to, here in the 5-minute chart, we've been down since lunchtime, since this morning here. We got, is that the high of the day? No, our high of the day so far was all the way back up here, 108.30. Here on this euro chart in the 5-minute time frame. So we're quite a long way below that, having breached 108 on the 11 o'clock news, the PMIs coming out of Europe, and then we went to a lower, and we put a low of 107.78 or 107.79. Really, that's really right through there, isn't it? 107.80 for the low for the euro. The euro's ticked up on that hefty. I think it's probably the thing that's really moved the bid market is this this slip combination. They both slipped. So this one's been ignored, the positive one, but the more important ISM number back into negative territory at 49, and the jobs openings continuing to decline. But this has been quite a hit as well, although it's a medium impact here. It's not the red one like these two. That's quite a significant hit as well. Those signs of inflation in the manufacturing sector ticking up quite significantly there. The sort of story of it not going away continues to hold. So euro up. If it's going to hold this gain here, we'd obviously like to see it back over 108, but that's quite a significant resistance area. Although having said that, it's moved through it. There we are, supported it here as we came down to it in the early European trades this morning and bounced off it. The data, the weak ISM data here out of Europe has pushed it under. So it's perhaps some sellers here at 108, but a break and hold of 108. We take it back up here today. Overall today, excuse me, the dollar is holding fort here. We move down quite significantly here in the 11 o'clock candle, and then an hour later in 12 o'clock candle to the downside. We're under the 20-day move now. So if this is going to move back over this pivot at 108, it needs to break the 20-hour moving average there at 108.06. That's the next resistance. And then this 50-hour moving average also coincides with this daily fib level. The first key one, the 38.2 of the decline here from the 18th of March through to the 26th is a daily range. So that's a key. That's a double line, if you like. We got that 38 first fib level, and then the 50-hour moving average to the upside. So there's some significant resistance to the upside for the euro if it can actually break 108. If it doesn't break 108, we could perhaps see new lows of the day, which was sorry, actually, this is hourly candle. Yeah, so new lows of the day at that 107.78 level. So watch that. Buy for above 108, and we can move back down if we don't breach 108. MACD remains negative. RSI started to tick up a tad, but that's still looking dollar strong, even though the data stronger, I should say, on the higher time frame, even though the data was dollar sort of dollar negative, if we like, but it's not negative enough to break 108, given the weak euro PMIs we've had this morning as well. So we'll see if that 108 breaks going forward. Sterling 128.90, so that's under 129 here, and again similar setup. We remember the UK PMIs is the weakest of the European bunch as well. So it's we've bumped to new. This is 1 hour chart. So bumped to new day lows just ahead of this data. It's reacted a wee bit, but we're into the that low here from the 26 low on the 26 there. 128.72 is the low. Next low to the downside. If this can resist this move up, but the move up needs to break this first resistance here. You can see we've been down most of the day, and that remains relatively weaker, so the dollar remains on the front foot there. Gold may have pushed back higher again. It's a little reaction here on the hourly chart from the excitement this morning. We went to this new all-time high again. We just sort of consolidating around about the 31.30 level. So we'll look at that later on in the day, see where that finishes. But gold not moving on that data in particular. Elsewhere, Bitcoin was better again yesterday, along with the bounce in the indexes. Let's start with the top cryptos. Bitcoin, it's down again now. It's under 83,000. It went to 84,000 earlier. We were at 84,300 this morning. Last time I looked at this, this was moving up quite nicely. It's rolled over here in this hourly chart, but if we go to the daily, as we said yesterday, looking for the quarter, there's the rally. That's a big move we had up that last Monday. Yesterday, Thursday we went down, Friday we went down, and we just didn't move at all yesterday to close out the month and the quarter. So we were under this 82,000 level. So we're closer to the low down here at 78, 76 range than the previous channel we'd been in at 92,000. So Bitcoin remains sort of biased to the downside since Thursday, under the 20-day moving average at 84,700. And yeah, that's about as much as I want to say. To be honest, you can see the 50-day needs to be broken to the upside as well. Bit of a range here, sort of not a lot going on. Do we need to test these lows again? That may be the case before we get some significant buyers. Probably nothing in anything from the tariff story tomorrow around crypto market. There's been very little positive or negative, for that matter, comments from the new regime in Washington, the new administration. Lots of excitement also before the ahead of the immediately post election, but maybe some more with regard to regulation and taxing. Again, they've all sort of sat on the back burner. It's all been focused on tariffs, hasn't it? So crypto and the leader of them all, Bitcoin, sort of slipping down, trades 82,600 at the moment, biased to the downside on the higher time frames. Oils continue to tick higher. They're over the $70 level. We had a strong day yesterday. You know, we were talking about this yesterday, end of month, end of quarter balancing, but we had a strong rally on supply concerns rather than demand looking up. But it was a strong positive day, and that's many traders have taken that as a big indicator yesterday to wrap out the quarter. Remember yesterday we were talking about we were at $80 and we went all the way down to $65, but we finished the actual quarter around over the 70 handle, which was key, and it was a big candle yesterday, reaching the $70. So the $70 level now becomes our new support level going into April. We're over the 50-day moving average. So this minor entry here on the 20th would have perhaps it's not trading oil, my strategy, but that would have been that would have been added to that position, certainly on the break of the 50-day moving average as well yesterday. So you can see the next level is this flattening level here, the flattening level of the 50-day, which takes us to $73 through here. You can see that next upside target is $73 for there we are for US oil. Brent, very similar sort of pattern. Big strong day yesterday through the 50-day moving average, but the numbers are a bit higher. So $77 is the next upside target for Brent to the upside. 76, 77 there, but we call it $77 for the sake of a few cents there, 76.80 if you like. But that's the next upside target, and that also happens to coincide with a retracement of the key Fibonacci level, the key fib level at 77.32 as well. The first 50 fib sits at 75.71, which we're sort of in the process, 75.60, which we're in the process of testing today. So that's be interesting to see if it runs out of steam at that level. UK oil. The other trade we had open this morning was the Kiwi, which we'd pulled we were short this. We'd pulled the Was it here? I can't remember. Perhaps it was. We pulled our stop loss down, so we took another. We had half position still on, so we took another 20 pips. So it's 40 pips in all on the short Kiwi dollar trade from the 24th. That's completely closed now. And the only other trade that's still open, if we've got the indexes, is the Nasdaq, which didn't get stopped out, but didn't get back to its stop loss yesterday. There's our stop loss from where is it? 20. We got in at 20,212. It was higher than that. It says 19,000. It was 20,212. We were actually entered it. First target was 19,500, which was taken out on Friday. Thank you very much. And then we went lower again on yesterday, and then it was close to actually ended up positive, didn't it? We went down to 18,840 yesterday, and we're currently trading at 19,130. Our stop loss sits there at 19,320. Is it? I can't remember. I thought I'd written it down. It's on the Discord group, isn't it, somewhere? On the trading strategies plug, what was the Nasdaq? 19,380. Is it? That's not. No, that's incorrect. That was 20,021. I don't know where that's come from. But anyway, 19,390 is where the stop loss is here. So that's 19,380 is our stop loss. Got in a smidge of it earlier. Looked like it might have been getting taken out like the others were, but we've rolled back down now that the live session is open, and we are lower in US trading session. Currently, yesterday we were up for the S&P, as we've said. The Nasdaq was lower by 0.6%, and the Dow was up 0.89%. Yesterday. We've got continued worry, obviously, about potential recession in the US. It's getting talked about more frequently now, but obviously a lot will be depend on what's actually comes to fruition tomorrow. But it sounds like the rhetoric and the spin that's going around about Liberation Day tomorrow, April the 2nd, Wednesday, is that it will be as tough as many people are thinking. So yeah, watch these tariffs as we go forward. So, higher inflation, lower growth, stagflation in the US. You've seen people, the further decline potentially in the US stock markets as better investment returns are found elsewhere, and that's what many are saying, particularly in Europe, particularly in the German defense stocks, which have had a massive rally during March because of this fiscal change the Germans are going to implement. It's obviously actually doing it is the key thing. It's okay to talk about and expect it, but this has been quite a significant shakeout for the tech stocks, hasn't it? From this 22,000 plus for the Nasdaq 100 and these all-time highs here at the beginning of April, a little over 6 weeks later, here we are all the way down at 19,000. So quite a significant decline in a correction area. But again, the bulls would tell you, well, that's healthy for a market. But that is quite a significant decline, isn't it? We've seen from the highs. So and then we bounced, but then gone lower again. So the waves are forming, aren't they? So where's the next level? If we look to the left, you can see there's a bit of a support here at, we did this yesterday, 18,500. Then we go back here to the summer of 2024. Volumes in the summer are always a bit questionable. So, but they happen, they're marked. So technical systems will have registered these. So that's 17,800 on the Nasdaq, and then we go back here. This takes us to the spring last year when we were down at 17,000. So this time last year, so tremendous rally since then. But it's it looks a long way at the moment, but that's not that far away. Another 5-10% down easily from here cannot be ruled out. And you can see now if I zoom in there a bit, you can see what a bit of a low that was, bit of a pivot turn here as well at those levels. And the next one is this one here, that 18,700 level. So again, many technicians like myself will be looking for those zones and those areas As you can see, we got overbought here, and rallied, but it's sort of petered out, and we're lower than the last low, aren't we, as of Friday's sell off. So end of the month was a bounce up, but we're down again today. So yeah, still short. Nasdaq 100, Dow's down, whole cash markets down 1%, S&P's off at 0.845 of 1%, and the Nasdaq's doing the best. It's only down 0.7 of 1% currently. So if there's no questions, guys, I'll wrap this up early today. I'll just go back to the data, which let's go back to here. Is it updated? No, it hasn't. I have to go back to the Forex Factory calendar. So the data, quite a strong set, quite a significant set of data, I should say, all pointing in the right in the same direction. We had a miss for manufacturing. It's gone back into a contraction zone. That's again quite a significant 2 ticks on that one. The positivity from the earlier reading has waned, and then job openings have lowered again. And on top of that, prices have ticked up quite significantly, 69.4 from 62.4. If we look at the chart on that, you can see what a significant hike that is. We're 69.2 represents the highest manufacturers have been able to charge since July 2022. So that's a very, very significant hike up. Last month was, I remember saying at the time, the March number was that an outlier, just like we'd had here the previous spring, May 2024. So that looked like that was a bit of an out, but that's quite a significant. So is this another outlier, or these two can't be deemed outliers? But that's a significant tick up for PMI manufacturing prices, 69.9. So hence the weaker dollar. So let me leave you with the gold market. I know that's the most popular asset that our traders trade. So yet again, a new all-time high. Yes, again today. Fifth consecutive day higher for gold. Fourth consecutive day higher for gold, I should say. 31,480. $3,148 for a single ounce of gold on the spot market today, and we're still long that traffic, and we've got our stop loss, as I said earlier, at 31.10. So thanks for your time, everyone. I'll see you tomorrow. Tomorrow is ADP day. It's obviously, more importantly, it's Trump tariff day. So all eyes to the Washington, and always when you're trading, when you've got live risk on the table, always watch your positions and always manage your risk. If you're not a member, if you haven't joined us, if you haven't got an account with us, do join us, guys. It's there's all sorts of offers available. We've got the EAD30 coupon you can put in here. So if you put in EAD30 for your first time member, you get 30% off any of our, or across our board. So even if you want to start with the $5,000 challenge, you get 30% off that $55. That brings it down to $30 something. Our most popular is this 25,000 one, and the EAD30 will get you 30% off that $175 price. So bringing it down under $140, and the rules are there. Follow the rules, become a funded trader, and then the world really is your oyster. But you've got to trade in a disciplined and organized way. We're here to help you. We're not hiding anything. We're a very transparent company. We're very honest and open. The terms and conditions are here. There's nothing to that's sort of dubious about what we're doing or anything at all. These are demo accounts. They are supplied with live data from live liquidity providers. But yes, they are demo accounts, but this funded account is real money. You know, you trade with this, you're successful with this, you take real money out, you withdraw real funds. Like if we go back to our main page here, you can see, where's it gone? Oh, it's disappeared. There was a little, I have to go back to the main page. No, it's not showing it. Oh, okay. It's not. I was going to refresh that. Let me refresh. Want me to refresh that? Yeah. No, it's just got me on the cumulative valuation. The web page has a list of. Oh, it's not completely blank now. As our recent funded traders, but it's not showing me that now at the moment. Anyway, I say we're here to help, my friends. There's nothing to hide, and I say do come and join us. All the very best. I'll see you tomorrow for private payrolls and see where we end up following what Mr. President Trump has to say later. All the best, everyone. Bye bye.